So how do we pacify this wailing bear cub? As far as the baby's concerned, the only thing that will make this recession thesis go away is a trade deal. She's not impressed by the strong labor market. Employment is often a lagging indicator. She knows from last week's Fed meeting that the Fed seems pretty oblivious. She doesn't care about the newfound strength in Texas or the Southeast. For this baby, it's trade deal or bust. And that's a real shame because I don't see the trade war with China ending anytime soon. President Trump wants American manufacturers out of the People's Republic. We spoke to Brian Goldner. He's the CEO of Hasbro this very morning. And he told us he's aggressively moving his toy making out of China since Trump started rolling out these tariffs. But Goldner also made it clear that Hasbro has an asset-light business model, meaning they don't own the plants, so they're free to quickly move production. Not many manufacturers are like that. And I think the White House underestimates how hard it will be for these companies to pull up stakes. For now, Trump appears to have the upper hand. We import from them far more than they import from us, so it stands to reason. And we know the Chinese are struggling, so he's got no incentive to deal. But what happens if we get a recession? Then we need to talk about politics, which I hate. With the recession, you're likely to have a Democrat in the White House come 2021. The only question is which Democrat. Whatever your own views, the stock market prefers someone like Joe Biden, who's not really going to rock the boat. But what about the less business-friendly candidates like Bernie Sanders or Elizabeth Warren? If you want to understand their impact on the market, well, I got a way to do it. You know, I like to get things. I like metaphors of stocks. I like Humana. I like Humana as a metaphor for this moment. The health insurance company will be public enemy number one in the Sanders or Warren White House. They want single payer, no room for private insurance. So Humana is going to get clubbed. They'll be hit the hardest when the yield curve inverts because if we get a recession, it dramatically raises the likelihood of a Sanders administration. For the moment, that's all this market seems to care about. So why even bother to own stocks here? Good question. Why deal with a shrinking baby? Excellent question. Because, like the dollar linkage, like the oil linkage, I think the yield curve linkage is wrong. The lower our interest rates go, the better it is for the consumer because people can borrow more cheaply. I think this will be a huge boon, especially to housing. Lower rates are like oil. As long as you're not forecasting recession, they're great for the economy. Who doesn't want a 3% mortgage? Still, the market can stay wrong longer than you can stay solvent. If I'm right, when will you know it? That's the hardest question because we need to see an acceleration in hiring, an acceleration in workforce participation, and ideally some huge infrastructure spending from the government, although politically I think that's very unlikely. Bottom line, until we get some tangible signs that the economy is picking up, you're going to have to get used to the screams of this needy bear cub of the market. But I have to urge you to stay the course because like oil, like the dollar, I do believe the linkage will be exposed as faulty and stocks will remain the best investments.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.